Good morning, folks. Happy Saturday to you. Coming at you with this week's market wrap video. Um, last couple of weeks, I've been saying that the Bulls could maintain control if they really wanted to. Apparently, they do not really want to. Listen, I also stipulated last week that if earnings season is disappointing, that could be the catalyst that changes things and puts the Bears back in control. And so far, from the earnings that we've seen and some of the guidance that's been given from companies that are reporting their guidance a little bit early ahead of earnings, it has not been that encouraging, and that is a problem because this was supposed to be the quarter that we would start to see some recovery of revenue growth and in earnings, and that was supposed to be this quarter. If we don't get that, then we have 5 quarters of subpar earnings growth and revenue growth, 5 quarters in a row. And that at some point, fundamentals do matter. Throw in the fact that we've got the Fed jawboning a rate increase, and we have a debacle of a presidential election happening, and we've got some hurdles to overcome. So let's start with the dollar. So with the Fed jawboning a rate increase and some of the economic data that we've been getting that could support that rate increase, you've seen a stronger dollar. The stronger dollar has been smashing gold and miners. We'll go over that in a second. But the dollar had a nice little bounce. It got out of the upper Bollinger Band and consolidated a little bit, got back into the Bollinger Band, and it's just grinding higher. Now, it's not on significant volume. However, the stronger dollar is going to create some pressure on aerospace and defense, the big multinationals. It's going to create some pressure on gold and silver. It's going to create some pressure on industrials. So that's kind of what we've been seeing. And then you had Honeywell, which came out and gave some weak guidance, specifically referencing the aerospace and defense sector. That puts more pressure on the industrials, puts some pressure on aerospace and defense. And if this dollar continues to strengthen, I think you're going to see more of the same. Now, if we get a pullback in the dollar, then I think you're going to see a nice little snapback bounce in gold, silver, and the miners. But for right now, those look extremely weak. So let's just go there right now. We'll take a look at gold. Okay, gold, which is broken down below its 200-day moving average. It is consolidating in this range, trying to hold above basically 119, but it is struggling, right? And we had a little bit of a snapback bounce, but this is a bear flag pattern, right? We do have a gap that we could fill on the daily if the dollar were to break down, and we see a flight to safety. Gold and the miners could get a bounce, but right now, very challenged looking charts. GDX, GDXJ, GDX consolidating just below the 200-day moving average. GDXJ, same type of pattern. It is still above the 200-day, but still not looking real healthy, right? Let's take a look at JNUG and Nugget real quick. These are the triple levered ETFs, right? Bear flag consolidation, looking like they could break and go lower below the 200-day moving average, below the 8 EMA. A lot of resistance overhead, and just not looking very constructive. So, and what's funny about this is this just did a forward split, 10 for 1. If this thing continues to tank, they'll be doing a reverse split, 1 for 10 in about 2-3 weeks. So keep that in mind if you're looking to play JNUG or Nugget. Um, Nugget just did a 5-for-1 split. It could be doing a 1-for-5 in a couple of weeks or so, right? So be careful if you're looking to play these. And I would not listen if you take these for an intraday trade. You make a nice little chunk of money, and you want to hold some for a potential continuation. If you get some kind of a snapback bounce, you want to hold for a potential continuation move the following day. Hold a lotto position, but lock in your profits before the end of the day on the bulk of your position. At least that's what I do. When I play these, I try not to hold them overnight unless it's strictly just a lotto position. And I do that. I mention that for any type of triple levered ETF. Okay, uh, you know, Labu or LABD, do not hold them overnight unless it's strictly a lotto position that you're going to let run, but you've already booked a good chunk of profits. All right, so on the flip side, if we do break down out of this bear flag hard, look for an opportunity for an intraday trade in dust or J dust. Okay, coming up into an area, 51 bucks basically is an area of price resistance for dust. If it can take that out with conviction, potentially come up and test this 100 EMA, right, somewhere around $70 or so. So keep an eye on dust, and then let's take a look at the other one, J dust. We'll look at that real quick, and then we will move on. J dust. All right, so hanging on to the 50 EMA, 36 bucks. If you can take out $36 with real conviction, I think you get probably going to have a little bit of resistance right around 40, but potentially could go up and test somewhere around $47, where you've got some pretty clearly defined support and resistance. So J dust and dust should be on your radar as well for intraday opportunities. Okay, so let's take a look at the NASDAQ. Real quick too, we'll go there in a minute. All right, so let's look at the NASDAQ. Did have a little bit of a bounce, right, after piercing the lower Bollinger Band, coming down and testing 5170 basically as potential price support. Bounced off of there, got back within the Bollinger Band, but still not a very convincing close. Closed nearly at the low of the day. We'll see if we can hold this 5170 next week. If we can't, I think you come down and we test the 100 EMA at 5127 or so, and most likely going to come down and test 5100. And if 5100 can't hold the support, I think our next area of really significant support, price support, will be somewhere in the 5,000 mark, 4980. So let's take a look at the really beaten up sector, IBB. Right, so there were several areas of potential support that we were looking for the IBB to hold, and did not do so. Closed right at the low of the day on Friday. The sector is under assault. ARIA, it was the last one to just get pegged for raising their prices, and that got hit on Friday. A big concern with this particular space is the thought of having Hillary Clinton as our president, and then also having a Democratic House and Senate, because of the complete blow up that is happening with the Republican Party. So that is a big concern, I think, for this space. You look at what happened to ARIA. Likely all these guys are going to be called before a congressional committee, right? Close right at the low of the day. The space is just under an immense amount of pressure, and I don't expect that to change in the near future. That doesn't mean we can't have a snapback bounce in the sector. We certainly could. Let me go back to the IBB here. But what is real concerning about this, and I'm going to back this out to the weekly and take a look at it, show you what I'm looking at. The real concern here, we move this trend line. This is a 200-week moving average, the white line right there, and it has managed to hold for a while. We pierced below it one time, and boom, we bounced back up. But now look, we've come up into the short-term trend line, and we are right back at that 200-week moving average, which also happens to coincide with this long-term trend line. So if we break below that long-term trend line with conviction, I think that becomes very problematic for the IBB. And potentially, we come down and test somewhere around this 210 area where we could find some price support. If we take 210 out, it could get pretty scary with the IBB. So this is a space, telling the pro members over at Alpha Wolf Trading that we need to be extremely cautious of. Can you take some intraday bounce trades in the space? Sure you can, but holding something overnight I think is pretty problematic, at least right now at this point in time. Let's see what happens next week if we can maintain that trend line, that long-term trend line, if that serves as good support. The other areas of price support, hold on a second here. So we're currently sitting at 266. The next area of potential price support is right around this 263 area. Right? If we break below 263, next area of potential price support is, of course, the trend line, which will be right around 257, 260, somewhere in that area. If we don't hold there, then likely we are coming down to potentially test 242, 240, somewhere in that area, right, where we've got some previous price support, and that's still quite a ways away. So be very careful in the IBB. There are a few ways that you can play it. You don't have to take a triple levered if you don't want to. You want something that's a little less volatile. You can take the BIB, which is this is the bullish ETF, which currently is looking pretty darn weak. See if it can hold 40 as price support. It is piercing the lower Bollinger Band, but could come all the way down and test somewhere in the 35-50 range, right? And then you've got the BIS, which is the short ETF for IBB, currently testing 37. If you can take out 37 with conviction, I think you're going to have a little bit of resistance right here at about 38.50 or so at the 200-day, but could come all the way up and test this trend line up here around $42, $43. So that's one way to play the IBB. The other way is to take a look at LABU and LABB, which are the triple levered. LABB closed right at the high of the day, which you would expect since the IBB closed right at the low of the day. And looking at the next area of potential price resistance, right around 25 bucks. I'm looking at this area here, right, where there's some resistance. After that, the 100 EMA, 26.40. I'm going to get rid of this one here. The next significant one is up at $28, $29. So could get a pretty significant move in LABB if the IBB takes out that long-term trend line with conviction. And then, of course, for a snapback play or a bounce in the IBB, if we get one of any significance, you could look at the LABU, which is the triple levered, just closed below the 200-day moving average, not looking really healthy here. I would be careful in the space for sure. You could take, like I said, some short-term trades, intraday trades in LABD and LABU or whatever. Just make sure that you lock in profit and don't hold them overnight unless it's just a lotto position. All right. So the other story that we had this week, or last couple of weeks, is well, actually, before I go there, let's take a look at the S&P 500. Take a look at the SPY. So last week, everyone was, I shouldn't say everyone, an awful lot of people were paying really close attention to 212, right? And it's been my line in the sand as well for the last several weeks. But I told the pro members in Alpha Wolf Trading this week that there are a tremendous amount of eyeballs on 212, and if we break below, don't start aggressively shorting or going, taking short ETFs or volatility plays until we get confirmation. Because since everyone is looking at 212, uh, as soon as it breaks, there's going to be people that are emboldened to jump on and start to try and get aggressive short, and they could be setting themselves up for another rip your face off rally. So I changed my focus on the S&P 500 to a different number. And I did that because I backed out to the weekly and took a look. And this trend line has held as support right here, here. So what I was looking for is 211, right? If we take out 211, which it's a little cleaner on the weekly when you look at it, right? We've got potentially significant price support there at 211, right? Acted as resistance, acted as resistance, acted as resistance, right? Pretty good support there, or resistance at one time. So you would think that that would give us maybe some good support. If we break below 211 with conviction, then I think we have a problem, right? So you break below this trend line, and then what happens? This trend line then becomes resistance on the way back up. So 211 is what I'm looking for. We'll see if we can hold that next week. We did manage to break above this little trend line here, but again, wound up closing towards the low of the day. So we'll see how this reacts next week, but 211 is now my line in the sand. If we take that out with conviction, I think we have more downside ahead. Let's take a look at the SMH, which has been one of the strongest sectors out there. Finally pulling back, pulled back, tested the 50 EMA, bounced off of it, 66, nice round number, bounced off of that, back up into this trend line, unable to close above the 21 or 8 EMA. The bottom line is this: if the markets roll over, even the strongest sectors out there are going to follow the market, and we'll see if next week we can hold up at that 50 EMA, or if it breaks down. If it breaks down, I think we come down and test this 100 EMA right around 63 bucks. So caution in the semiconductor space. Let's take a look at oil. Nice run after all that OPEC chatter, and then we had some non-OPEC chatter this week. I mean, it had a nice run. It's consolidating, holding the 8 EMA. Oil is actually looking pretty constructive here. We'll see if this 8 EMA can hold as support. And, we just had, so one of the things that I'm looking at is we just had the 50 cross over the 100 EMA. It's above the 200. Could it pull back to $11? That is an area where I would look to find some potential support in oil. But oil is looking actually pretty constructive. So while I'm here, let's just go ahead and talk about volatility. So, we had a little bit of a weekday on Friday, and volatility really didn't do much. Went right up into resistance at 1923, 1925, pulled back, right? That's price resistance and support, right? So support here, resistance here, pulling back a little bit. If the markets really do roll over, if the SPY takes out that 211, If the IWM takes out 119, uh, you know, we're going to see some weakness in the markets, and we're going to see some fear start to come in, right? So you could see some pretty significant pops in UVXY and TVIX. Now these are levered ETFs, and again require caution, right? These are not the kind of things that you want to hold overnight unless it's just a lotto position. But volatility could certainly pick up if we take out some of these key levels. Now, I talked about the IBB. I'm not sure that I talked about. See, this is what happens when you get over 50, I guess, because I can't recall whether or not I talked about the IWM. So I'm going to do it again. 119 is the area that I am watching. Right? If we break below 119, I think potentially we come down, we test this 115 area. Next area is this 113 where we've got the 200-day moving average. So, you know, pretty critical area here for the IWM as well. Might have already said that, but it's okay. All right, let's move on to some specific industries. So let's talk about transportation. So, you know, if oil continues to rise, I think that could be problematic for the airlines. However, CSX reported last week and had a pretty good earnings report, right? So had a little bit of a bounce. CSX has been kind of grinding higher. But the transportation sector has been consolidating. As long as it can stay above 143 with and continue to consolidate, maybe it consolidates, we get a move higher, we'll see. One of the better looking sectors out there right now is the transportation sector. Another sector that is worth keeping an eye on is the financials. We just got a report from JP Morgan on Friday. We'll have more earnings next week. Goldman Sachs and Bank of America. We'll see how and with the talk of rising interest rates, which is better for financials. If you don't want to play a specific financial name, you can play FAS, which is the 3-time bull, triple levered, or you can, if the financials break down, you look at the FAZ. But right now, FAS is looking pretty interesting. If it can take out 29.50 with real conviction, I think maybe you get a pop in financials. Worth keeping an eye on that space. All right, let's talk about aerospace and defense, which I briefly touched on earlier. Aerospace and defense, been telling the pro members over at Alpha Wolf, this is another space that we need to avoid unless you're short biased. It's not looking real healthy. So let's talk about how talking about the IBB and if it breaks that long-term trend line, right? So let's just look at this trend line here on aerospace and defense. Back in February, it's held this trend line and it finally broke down below it, right? Broke down below, found a little support at the 100 EMA, bounced back up. Where to? Right into this trend line, and that acted as resistance, pulling back. So now what do we have here? We've got a lower high. We've got lower lows, right? Still not looking very healthy for the aerospace and defense sector. It is trying to hold here at this area of potential price support. Let's just call it $56. If it breaks below 56, where do we likely go? Potentially we come down, we test this 200-day moving average and see if we can find some support there. But not a good looking space. Lockheed Martin just had a negative article come out on Lockheed Martin last week saying that their earnings are going to be disappointing. And if you look at it, it's consolidating just below its 200-day moving average, approaching this trend line, and that is a long-term trend line, right? It's been trading between these two trend lines for a while in this channel that is moving higher. So there is a possibility that it finds some real good support right around 226 in that area. Um, that's potential price support and long-term trend line support. But right now, currently not looking real positive for aerospace and defense. So I would be careful in that space. All right, let's take a look at, we already talked about biotech. Let's look at home builders. Home builders been telling the members in Alpha Wolf Trading to avoid home builders at this point in time. I mean, we're approaching winter, which is typically not a good time of the year. We're approaching holiday season. I wouldn't think that that's a great time for the holiday, for the home builders. Not looking good. Technically, just took out the 200-day moving average, grinding lower. It is an area of potential price support. If it breaks below 32.75, likely going to come down and test somewhere in this 31.50 area. Broke this trend line, right? So not looking real healthy there. All right, XLB Materials testing, bounced off of the 200-day moving average, trying to hold on to 40, let's call it 45.50 as potential price support, but not looking real healthy, right? Takes out 45.50, whereas the next area of potential price support could be somewhere right around here, around 43.50. But again, not a real healthy looking chart. Energy, XLE, along with oil, a little bit of a pullback. Oil and energy related names, one of the better looking sectors out there. We'll see if this is just a temporary pullback here. Maybe it comes back and tests this trend line. Maybe it just pulls back and tests the 100 EMA, find some support and get a bounce there, but probably one of the better looking sectors. XLF, another way that you can play the financials is XLF, not quite as volatile. If it takes out 20 bucks with conviction, could get a nice little pop in XLF. Industrials, so Honeywell, gave some not impressive guidance. We've got Honeywell, GE, somebody else reporting this week. I think it's at the end of the week. Could these things run into earnings? It's possible. We did just break this short-term trend line here. 56.50 is the line in the sand for the industrials. Could have a double bottom forming there. We'll see. But if the dollar continues to rise, expect XLI, the industrials, to struggle a bit. So not real convinced with this sector, but we'll see what happens with the earnings next week. XLU, if there is some real fear that starts to show up in the marketplace, right? If there's some real fear, we break some of these technical areas of support, you could see a flight to safety, right? This is still a bear flag, in my opinion, in the XLU, but we could see, it's got a lot of resistance above. It's got a lot of, it's moving averages, 200-day, 100 EMA, 50 EMA, not a real good looking chart. Could you see some activity there if people start to get scared, want to go into some, dividend players, possibly? We'll see. All right, XLV, healthcare, terrible, right? Along with the IBB, below the 200-day moving average, trying to hold on to this $69, right, for support. If it breaks below 69, I think we're going to come down and test the 62.25 area, or 68 area, right, as potential price support. But we have broken this trend line. So now you've got the 200-day, which will act as resistance on the way back up. You've got the trend line that will act as resistance on the way back up. Not a very encouraging looking chart. XLY, which is consumer discretionary. Look at what we've done here. We've broken below this trend line, right? Below the moving averages. 200-day acted as support. Got a little bounce there, but now we've got this trend line, which is acting as resistance. We'll see if it can get any follow through. Talking restaurants, Del Frisco's just reported, cut their guidance, but actually the stock held up pretty well, which is interesting. But look for, I mean, it was trying to get back above this $80, $80.25, consolidating right there, and wound up finally breaking down a little bit. It had been trading in this channel, consolidating for quite a while between 80 and 82. Not looking, technically, just not looking real strong. Metals and miners, as one could expect, showing some weakness, right? If the dollar continues to rise, metals and miners, you're likely going to see more weakness. Looking for this to, $24 to hold as potential price support. It could be an area where we get a bounce. Maybe it's a double bottom area. We'll see. Oil and exploration pulling back a little bit, but like I said, oil, as long as it stays over $50 a barrel, is probably one of the better looking sectors. But if we start getting some chatter, even the production numbers were higher than anticipated. We'll get more numbers out next week. But if that trend continues, if production, if inventory build continues, then we could start to see some weakness in oil and oil related names. Retail, not looking real good for retail, right? Trying to hold on to this $43, right? If we break below 43, maybe come down and test somewhere around 42 bucks. See if there's any price support there. I mean, we are coming up into the holiday season, so we'll see. We'll see what happens with retail. But for right now, just trying to hold on to that 43. If it breaks below, then maybe we have some issues in the retail space. So, all right, I think that was a pretty good synopsis of everything that's going on right now. The bottom line is now the bears are looking like they could take control, and it's going to have a lot to do with this earnings season. Maybe we get surprised next week and we can turn things around, but technically we are looking a bit challenged. So I would be very cautious. Like I said, if you're going to play those triple levered ETFs, play them, but be careful. Don't be holding a large position overnight, because things can turn on a dime in earnings season, right? Can get a lot of surprises. So for right now, like I said, a little bit bearish. We'll see what happens next week. If you like what I do here, come join us over at alphawolftrading.com. If you have any questions for me, email me at tim@alphawolftrading.com. And free chat room for everyone, and a pretty good comprehensive educational, not pretty good, it's awesome, comprehensive educational program for anyone that wants to learn more about what I do. Become an Alpha Wolf member for $1 a day. $1 a day, that's it. Pretty ridiculous, actually. Over 10 hours of educational program. All right, listen, I am going to be doing stocks to watch for next week, tomorrow at 8 a.m. Vegas time on Ticker TV. Join me there. I'll also be going over the earnings that we have coming up next week and any economic data that will be coming out for next week. So if you can make it, fantastic. If you can't, that's okay. It will archive on Ticker TV. You can watch the replay, and I will also post it up on the blog. Okay. Enjoy the rest of your weekend. Be safe. Have fun. And I will see you all next week. Be careful out there, and good luck trading.